Hey friends, in this video, I'm going to do an update to a 2-year experiment that I've been running since March of 2019. So we're coming up on 2 years, not technically 2 years, but I'm going to call it 2 years because we're like a month away, so we're going to round up a little bit. But what I did with this experiment is I wanted to see how two different real estate investments would perform, one against the other. So I put $1,000 into one and I put $1,000 into the other. The first one that I put $1,000 into is a REIT, an M1 Finance curated REIT, real estate investment trust. I wanted to see how it would perform. And then I took another $1,000 and I put it into Fundrise, which is a crowdfunded real estate investing platform. So they do the same type of thing, right? They're investing in real estate as well, but I wanted to see which one would do better. How would they perform over a long period of time? So at this point, we are at 2 years. I wanted to give you an update on both of those. So I'm going to log into each account and go over the numbers with you to see what I've been noticing, right? What are my total returns? What are the upsides? What are some of the downsides? What should you look out for if you want to invest in one or the other? So if this is something you've been looking for, I know I've had a lot of people asking about, hey, where's your update to this? Where's your update to this? Well, this is your freaking update, okay? And I'm going to give it to you. Now, I do also plan on making a big change to one of these two accounts, which I'll explain later in the video what I'm doing, why I'm doing it. If you can do me a huge favor and smash that thumbs up button, I would greatly appreciate it. If you do decide that you want to open up a Fundrise or M1 Finance account, then please use my link down in the description of this video. It does help support myself and this channel at no extra cost to you, so I'd greatly appreciate it. Okay, so here is the M1 Finance REIT. So as you can see, I started this on March 8th of 2019. It's got that right down here. And we are now up to $1,083.29. So of that amount, I've got earned dividends over that time of $65 and market gain of $25.74. So my return, my money-weighted return, I think this is what it is a little over 9%. Now, what's been cool about the time that I've been investing here is we got a chance to see how a REIT reacts in a bull market and when there's a crash like the health crisis that we saw, that the health crisis caused at the beginning of 2020. So if you look right here, you can see I started investing around the 8th, right? I had $1,019. And we were kind of like on a decent run. Things were going up, right? Then we saw a little drop at the end of 2019, and then it started to go back up at the beginning of 2020, where it topped out at, what, $1,200, a little over $1,200, and that's when the health crisis happened and everything started tanking. So this account got dropped all the way down to $739. So I had lost a lot of money, and I remember logging into this account and being like, oh, holy smokes, look what's happening. This is insane. Because yes, it did follow the stock market, right? The REIT tanked just like the stock market did. But if you notice, and if you think about where we're at right now, the stock market has recovered and it's even grown beyond where it started tanking at the beginning of 2020. But if you look at this REIT, look where we're at now. My account value is $1,083. So this REIT hasn't fully recovered, and it's pretty much like that across the board with most REITs. Real estate really took a hit at the beginning of 2020 with the health crisis, and it still hasn't recovered at this point. So right now, my market gains are only $25, which that is not very much compared to what it was in February when it was $1,215. So that's one thing to keep in mind with any kind of REIT that you're using, is it's going to follow the stock market if it is a REIT that's traded on the stock market, right? It's going to react differently than something like a Fundrise, which I'll show you in a minute here. So how I got this M1 Finance REIT, which I want to mention real quick, because I actually got it from their expert pies. So if you have an M1 Finance account, all you have to do is go up here to research and then go to expert pies, and this is where I found it. Now, it was under other strategies, but they actually don't offer this any longer because look, it's not even in here anymore. So what I can do is you can actually copy this M1 Finance REIT. Now let me click into it just to give you an idea of what is a part of this REIT. So they've got a a whole bunch of REITs that are traded on the stock market, or real estate type companies that are traded on the stock market. And it shows you the target that they kind of initially started me with, and I haven't changed any of that. I kept with the targets that M1 Finance started me with at the very beginning. And some of them are off a little bit, but I'm not going to do a rebalance of any of these because I'll explain in a minute or later in the video what I plan on doing with this account. So let's keep that in mind. 1,083. So I can share this pie with you if this is something that you actually want to invest your money into, this REIT with these specific holdings. So I'll throw a link down in the description, down in the description of this video is where I'll put it. So once you open up an M1 Finance account, you should be able to click on that link, log into your account, and then you can add this whole pie to a M1 Finance pie that's within your account if you want to. So let's go ahead and take a look at Fundrise next. Okay, here's my Fundrise portfolio, and as you can see, it's worth more than that M1 Finance REIT at this point. So let me click back over to M1 Finance. See, we've got 1,083, and Fundrise is $1,176. So of that amount, you can see that dividends all time is $105, and the appreciation from my real estate investments are $72.92. So we'll compare that to M1 Finance, where M1 Finance dividends have only been $65. Fundrise has been $105. And if you want to consider appreciation like market gain, appreciation at this point is $72, and market gain over here is $25. So that's where the difference is coming. And since this M1 Finance REIT is tied to the stock market, you are going to see this amount fluctuate quite a bit compared to something like Fundrise. Because with Fundrise, when you invest your money, it's going to be very unlikely that you're going to lose money through Fundrise like you might if you're going to invest in something in the stock market like a REIT, because you're actually investing into real estate with Fundrise. They are physically taking your money, and they are using that money to purchase physical properties, which I'll show you some of the properties that I own within my Fundrise account. So here's where we're at. Right now, Fundrise is winning out at this point, and my performance, let's look at my performance so we can compare them. So in 2019, I had a 7.3%, 2020, 8.9%. So all-time 8.9, which I don't think that's right. So let's ignore that all-time, because that number, my calculations, that's not right. So in 2021, of course, we're not through 2021. We just started it, so that's not very much right now. But so 2020, we've got 8.9%, 7.3%, and then Fundrise overall, it's a little over 9% return. But remember that M1 Finance, that amount can go down pretty drastically if something happens. So we kind of started investing at the perfect time to where we got to see that bull run, or the end of a bull run, if you will, and then we got to see what happens when the market tanks, what an M1 Finance REIT did compared to something like Fundrise. My Fundrise account, it didn't decrease. Now, what we would see happen with Fundrise is we might see the returns decrease, right? So we might not see like an 8.9% return. We might see a lower return as opposed to the overall balance in your Fundrise account decrease. Now, what you can do is you can actually go into your performance here, and you can see the different REITs that you are invested in. So what Fundrise does is they basically took my $1,000 that I invested, and they spread that $1,000 among a bunch of different mini REITs, if you will. So you can think of them as different mini companies within Fundrise that have specific investing goals when it comes to real estate. So here's an East Coast E-REIT. So within this East Coast E-REIT, it gives you my returns over the past 2 years, because that's all I've been investing. But what else is cool is you can go into each of these and you can see the types of properties that you own within these. So let's go into this one, and then it gives you a breakdown, a lot more of the numbers that you were looking for. So of my overall portfolio, 15.9% is in this East Coast REIT. And you can even scroll down further and see the active projects within this REIT for yourself. So right now, I've got 13 active projects, and they're spread among a couple different ways to invest. So the first one is an equity play. Another one, we've got a debt play. We've got another equity, equity, some debt plays, right? So they're not necessarily just buying and holding real estate. They're also lending your money out to other people who want to invest in real estate, who want to upgrade certain pieces of real estate that those individuals own for, a return on lending out that debt. So Fundrise is really good at making you money in a few different ways to spread out your risk. Because I take my earnings, so from dividends and appreciation from Fundrise, and go ahead and reinvest it back into Fundrise, what they do is they take that money and they put it into these new projects that they have going on. So here's the whole list of all of my investments at this point and all of the projects that my money is involved in. So some of them are ramping up, some of them are stabilizing, and then we've got ones up top here that are operating and fully functional, ready to go. But if we go to these ones that are already operating, I can click into it, and like I just showed you, it gives you all the details, like the numbers and the portfolio percentage and the amount of shares owned. But you can also go in there and get even more detail. So if we go to fund details here, it gives you an overview of what the goal is for this specific REIT, this mini REIT, if you will. We can scroll down and get a lot more detail, but what I'm really liking is they also give you semi-annual and annual reports as well for each of these REITs. So they almost operate these little mini REITs as their own specific businesses. So this one has its own 1K. Each of these have their own 1K. So it's while it is a part of Fundrise, it's separate. So that way it reduces your risk when you're going to invest your money into Fundrise, right? Because they're spreading your money among these different REITs, if one happens to completely fail, then it's not going to make your whole Fundrise account get destroyed by that failing mini REIT. My plan going forward is to actually take this M1 Finance REIT and I'm going to sell out of this completely. Now, the reason for that is you have to understand the bigger picture of what I'm doing with this money. So the money that I have in Fundrise and through this M1 Finance REIT is a part of a larger strategy that I have going on with a car fund in future investment that I'm doing. So what I'm doing is I'm investing for my future cars. I made a whole video on it. I'll link it up down in the description where I go over the details. It's a very long video and very in-depth because I do break down the math and the numbers of how I'm doing this. And with that math, all I really need to do is I need to be able to hit an average 7% return. Now, I have enough money in the stock. I'm going to be putting enough money in the stock market for this overall car investing strategy. So I want to limit that. So that's why I'm going to sell out of this REIT. And I haven't decided if I'm going to take this $1,083 and put it into Fundrise, which I might do, or if I'm going to put it into my larger car fund portfolio, which let me show you right now. So my car fund portfolio is worth $5,500 at this point, and it is just invested in VOO. Now within VOO, I'm already investing in real estate technically, so on real estate that's on the stock market, publicly traded real estate, I should say. So since I'm already exposed technically to real estate through this index fund, I don't think it makes sense for me to also have a separate REIT by itself. So that's why I think I'm going to take this money. I might roll it over, like I said, either into Fundrise or this index fund, car fund that I have going on. Now this car fund portfolio, this is going to be my largest portfolio when it comes to my car investing strategy. So that's why I'm thinking I might take the money from the M1 Finance REIT and put it into Fundrise, because as time, this thing's going to get above, I don't know, it's going to be $10, $20, $30, $40, $50,000. If you go watch that video, you'll see my math breakdown of how I plan on that happening. But yeah, so that's my plan with this M1 Finance fund going forward. Now, you really can't go wrong with investing in a REIT that's traded on the stock market or Fundrise. They're kind of just going to give you two different goals. They're going to operate differently because the REIT, it's naturally going to go up and down wildly if it's traded on the stock market, while Fundrise, you're going to get that slow growth, right? And you won't see your account decrease most likely. What's going to happen is you would see your returns maybe decrease. That's what it would be. But the closest you're going to get to actually investing in physical real estate without actually investing in physical real estate on your own is through Fundrise. That's why I've become a bigger and bigger fan of Fundrise since I started doing this experiment and learning a lot more about Fundrise in general. I think it's a great way to diversify your money. So if I had to choose one, or Fundrise or a REIT that's traded in the stock market, I would definitely choose Fundrise to diversify my money into real estate just a little bit more.